I know. No blabber, but you're saying really, really positive things. Oh, here, I remember. Okay. So sports card is considered actually investment style. You know what I mean? Like just the same as real estate or stocks. If it is or not, that's not, I don't care about that. The fact that it's considered it. And financial analysts, I heard actually are recommending sports cards as an investment portfolio to people.
Mm.
First of all, let me tell you my problem with that. What if financial analyst doesn't know much about sports cards? So like which one should people buy, right? So it's very tough. I don't know. Give me your opinion on that and what you think.
I haven't heard a financial analyst give opinions on sports cards yet, but what I imagine happening, if it's not already happening now, is that there's just mutual funds where it's literally someone that does know a lot about sports cards having, all right, here's $10 million, $20 million given to them. All right, well, what are we buying with this $20 million? And I think that's the part that gets scary is when it's the same thing as real estate. When you have these giant corporations or hedge funds with tens of millions or hundreds of millions of dollars, $100 million, someone with that money going into sports cards can wipe out a lot. Like they can wipe, I mean, $100 million
Yeah,
dollars. I was saying,
yeah.
all right, we have $1 billion in our portfolio. We want to put 50 million towards sports cards. I mean,
Ooh.
how much? Like that's a lot of Jordans. That's a lot
Oh,
of Kobe rookies and mantles and
yeah.
everything else. So, but I would imagine if there is, if it's not going on right now, some sort of mutual fund where someone or a hedge fund where someone is really good
Yeah.
at cards and is buying. Okay, I'm going to buy 80% classics and then 20% up and comers and whatnot, and then people are just investing. Well, here's $1,000, and I just want that's 8%. A year profit or 8% return a year or 10% or whatever it is, but someone else is the master controlsman and is putting all the pieces together. So it's like,
Mm,
I forgot what it's called for real estate.
okay.
Syndicator. A syndicator is
Yeah,
basically someone that
syndication.
says,
Yes.
yeah, syndication. All
Yes.
right, you invest
Yes.
100,000, you invest 50, whatever. I'm going to go out there and buy this huge commercial property, fix it up, and do all this. I'll give you guys each your 8% a year, and then when it sells in 5 years or 6 years, everyone will get a split of the profits minus what I take for myself, and
Right.
everyone wins that way. That's what I imagine is happening now or will happen in the near future.
Wow. Well, okay, okay. I'm sorry. I keep saying here's my problem, but here is my problem with that.
Mm-hmm.
You're talking about syndication, how that can be a real thing in
Mm-hmm.
relation to sports card world. Well, based on my knowledge, I knowing about syndication is that there can be a lot of problem with it. I know Grant Cardone. I've heard Cardone has
Yeah.
syndication, Cardone Capital,
Mm-hmm.
right? So Jordan Belfort, Wolf of Wall Street. I don't know if it's true, but he's talking about how Grant Cardone has unaccredited investors, meaning they have less than $200,000, something like that.
Mm.
So basically, people are spending $5,000, $10,000, like poor, like poverty people, out of desperation, just trying to make these profits. So I feel like the same thing could potentially happen in sports card world, where you have a claim to be expert guy, if he is or not, I don't know, but I think there needs to be a lot of requirement for you to be involved in something like that. What do you think?
I mean, that's beyond my comprehension
Oh,
on
okay,
that level.
sorry.
But that's also like huge money too. So I mean, I think on a smaller level, it could
Yeah,
be. I've talked to my girlfriend about this because she's interested in
really.
investing with me, and she's a
Oh,
full
wow.
time investor in the stock market. And so we talk
Wow.
and really, uh, she understands a lot of my theory of what I like about sports cards because she understands it from the stock market side and vice versa. So I would compare,
Oh,
she's talking about Disney and I was like, oh, that's kind of like, Charles Barkley or Google. Oh, okay. It's like LeBron James or whatever. And I
okay.
get it from that point. But I said, I mentioned to her, I said, I love this. And I could see myself investing $100,000, $200,000 a year in this and full
Mm,
time. And why not? And she said, yeah, and I'd give you money. I'd give you like 30,000 or 40,000 to like play with and put in certain things. And
wow.
obviously when you can do it and you do it right, then, well, another friend says, well, I got an extra 10,000. What can you do? And then it could all of a sudden become like a little hedge fund or like a little kind of syndication, but on a smaller level. Now,
Yeah.
I don't know the legalities with that because it could just be, look,
Okay.
instead of structuring it that way, I know what my investments will bring per year. And how about this? Let's just do a private loan. You loan me this money, and it's for it's a 3-year loan, and every year I just give you 10%, and after 3 years I give you your money back. And then that's a different way that people do it in real estate as well with
Okay.
flipping houses. It's just like a hard money lender, but instead it's saying, hey, how would you like to make 7% on your money every year?
Right.
Okay, well, 30,000, yeah, let's just sign a contract. Every year I'll give you 7% for your $30,000 for the next 3 years, and then after that you can cash out. Okay, deal. And then all of a sudden, now that's high risk as well, because
Yes.
you got to be able to cover yourself. But I can see
Exactly.
that becoming way more of a thing locally within small groups when one
Oh,
friend's really good at it, and then, hey, well, my investments in the market are tanking. This is really taking off. If I give you $5,000, what can you do with it? Well, how is 10% a year? $500. Well, okay, that's better than what I'm getting in the market. So sure, I'll pay you back at the end of in 2 years or whatever it is. So, dude, the sky's the limit. When money is being pumped into anything,
yeah.
the opportunities just open up in every direction.
You're exactly right. All right, sports card is crazy now. Oh my goodness, so many different avenues. And so this one you're talking about the hedge fund side of it. I didn't expect to get into the conversation, but we're already here. So I'm gonna say something a little bit real fast, right? So the lending part makes a lot of sense, right? Where your initial investment, and then in 3 years you'll get money back plus interest. I like that, but at the same time, why don't I just do the same loan but for real estate? It's a lot safer than
Yeah. Oh,
sports
for
cards.
sure. Yeah. And I mean, in my video that's coming up about the best investments, real estate's ahead of sports cards.
Yeah,
Now, but at the same time, you could overpay for real estate. You could overpay for
absolutely,
sports cards.
absolutely.
But I don't know anyone that's become a self-made millionaire from sports cards. I know a lot of people, hypothetically, in media, or like not hypothetically, but in the world, but also just locally as friends that have made millions in real estate while they haven't made it in sports cards. And there's a couple advantages of real estate and stocks over sports cards. But sports cards is the most fun. It's the coolest. It's the best to be active in.
Yeah.
If you don't like real estate and stocks. Like I didn't get into stock trading because it bored me. It was too analytical without the fun.
Yeah.
And the sports cards is the good blend of, I like looking at the card. I like the artistic side. I like looking at athletes that I watched on TV when I was a kid and being able to use the analytical side of my brain to profit off of it to keep it rolling. But if it was just looking at a chart of whatever companies, you lost my interest. And then real estate's great, but I became a realtor a couple of years ago and realized I hated real estate on the day-to-day side. I just loved the idea of it as an investment vehicle. So I learned the hard way, Brad, just stay a passive real estate investor. Don't be active. You're not a day-to-day investor. You don't want to go to a house and knock on a door and have tenants there yelling at you and having a hammer and you have to knock down this wall. That sounds miserable to me. But being active day-to-day in sports cards doesn't, while being able to have a real estate property that's growing in equity, that's providing cash flow, that's going to be able to add up all these tax advantages as well that other businesses don't operate. That's great. But I learned through years that that's my role with real estate. This is my role with cards. That's my role with the stock market.
Wow. I mean, the information that is being poured out of this video, if you guys don't like this video, there's something going on in your brain. Brad is just spitting incredible knowledge right now. Honestly, this should cause, I should be charging money for this.
Yeah.
I should be
Well, that's the next business. That's the next business.
Oh, I just thought of next business. $10. No, I'm just joking. I'm just free. I like free information. People, if they wanted to chime in, they can. If not, cool too. But
cool.